Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, annuities, disability, business continuation, or final expense life insurance funding, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing strategies for affording final expense life insurance. So finding affordable final expense life insurance is a big factor with our clientele. We help a lot of folks with final expense insurance. And if you think about it, the average person shopping for final expense insurance is an older clientele. They're on a fixed or limited income. They may be on Social Security or disability or a pension or military benefits or something like that. And they're not necessarily rolling in dollars. So affordability is always the number one concern for these beautiful people out there that we are honored to help each and every day. So I've got some things I want to talk about just to help find what could be that most affordable final expense life insurance policy for those folks and even children. We help a lot of people with children's policies, from newborn all the way up to age 18, because God forbid, we don't like to think about stuff like that happening, but if we do lose a child, and the only thing that would be worse than that is struggling financially to have to pay for that. So having a policy in place can just remove so much burden and trauma out of that situation. So first thing we always recommend doing is comparing multiple quotes. And I'm going to put a little asterisk on this one and tell you that doesn't mean go out and check with 25 different agents. Because unfortunately, there's a lot of marketing out there, and you see a lot of it advertised on TV, $9.95 plan, and no doctor's visits and no medical questions and all this other stuff. Well, those plans, anything that's got a gimmicky price, number one, be cautious about. And number two, that's kind of like those 990 something type plans. And then anything that says no medical exam, that's got a 2-year waiting period. And we don't recommend those 2-year waiting period plans when you qualify for first day coverage, which, pretty much 80-90% of the people we help do qualify for first day coverage. So the danger in just going and trying to get multiple quotes from a whole bunch of different agents is, number one, you don't know the quality of the agent that you're talking with. It could have been somebody that just started 2 weeks ago, and the business that they're working for, the owner they're working for, says you can only sell 1 or 2 products out of our entire, product portfolio that we have. So they're only going to pitch you 1 or 2 products, and it may not be the best one for you. In fact, in many cases, if you got some health issues, you're going to get declined, and then they'll push you into a 2-year waiting period. And it's not because you couldn't get approved for first day coverage. It's just that you couldn't get approved for first day coverage with the one company that they had to offer. So what we recommend instead, and what we do at Funeral Funds, is we'll run your information through our database of all the best insurance carriers in your state, and we'll actually do the shopping for you and get you multiple quotes. And that way you can make the decision, but we can actually give you some perspective on what may be the right company and why we would recommend a certain company. So a good example is help somebody yesterday with diabetic neuropathy. There's only one really good company out there right now for people that have neuropathy that's a result of diabetes. Everything else out there is going to result in some sort of waiting period or some other policy features that aren't ideal. So we happen to work with that one company that, and that's not by chance. We know the underwriting from these different companies, and we've selected that company because they fit a really unique hole, a really unique niche that we can leverage to get our clients better premiums. So, yeah, just be careful getting your name all over the place out there. There's a lot of these companies. What they do is they get you to submit your name and phone number and everything, and then they actually sell your information to their agents, and the agents have to buy it, and they may pay anywhere from, 30, 40, 50, 60, 70, sometimes even more dollars for that. and they will start blowing up your telephone. So, yeah, just be cautious about that. If you go to our website, fill out any of our quote forms, we're the only ones that will reach out to you, and we'll be respectful. If you decide you don't want us to call you, just let us know and we permanently remove you from our list. We really want to honor and respect your privacy. But yeah, we'll be able to get multiple quotes for you and get you the lowest pricing that you qualify for. The second strategy for affording final expense life insurance is choose the right type of policy. So, final expense life insurance can come in different forms. Now, term life insurance can be truly it is for final expenses. It's just that term life is typically designed for people who are younger, or if you're older, typically you're going to have to be healthier if you're older. So, if you do die, it's all going to be final expenses. But term life is often not the best. And as you get older, a lot of the term policies that are marketed at seniors go up in price every 5 years and cancel once you get beyond age 80. Well, that's not an ideal or optimum policy for somebody who wants to live a long time, or somebody who wants to lock in rates so that they know they've got that affordability for the rest of their life. And the challenge with those plans that go up in price every 5 years and cancel after age 80 is that most people get into that because the premiums are a little bit more affordable the first 5-year cycle, but then the price starts to go up and now they can't afford it. And certainly by the third one, they're like, now they got to cancel the policy. Now they've given all those premiums over to the insurance company, and the insurance company is not going to have to pay because they canceled the policy. So it's an incredibly profitable product for the insurance company, hence the lower pricing initially. So yeah, just kind of, there's, you put cheese on a mousetrap for a reason, right? To catch mice, right? So these low prices are kind of designed to kind of catch you that way. So we recommend whole life insurance. There's universal life policies out there that can work in very specific situations, and they've really got to be set up correctly. But whole life is just kind of bulletproof. You want to always consider the pros and cons of each type of plan. The pros of whole life insurance are that it lasts until age 121. Your premiums will never go up, your coverages will never go down, builds cash value, and they're designed to pay out very quickly. So just make sure that whatever policy you're looking at or you select just aligns with your budget and your long-term financial goals. Now, another strategy for affording final expense life insurance is you can adjust the coverage amount and in some cases with term life insurance duration. Okay. So term life, again, for most final expense life insurance for seniors, we're not looking at term life. So for whole life, you can just adjust the amount of coverage. So say you want to get buried and you figure it's $10,000 in your area. But you also want to consider inflation over time because we're hoping you don't die right away, right? But if your budget just doesn't allow you to get 15 or $20,000 to adjust for that inflation, then just get 10,000 for right now because that takes care of the most immediate need. And then we can always circle back with you in a year or 2 or 3 and looking at adding more coverage. A lot of times people will have bills drop off or their income increases or something like that. And then they can afford a little bit more insurance. So it's very flexible, and we offer that flexibility with our clients for them to be able to do that. Because bottom line is if you don't have any insurance, then your family's going to have to pay for it, and they're going to have to pay this high financial burden, this high cost to get this thing done at a time when they're traumatized by the death of you, and they're going through all that grieving and all that mourning, and nothing makes that worse rather than having not any money to do any of that. So that's one aspect. Now, from a term perspective, if you're younger and it's too expensive, you can go from like a 30-year down to a 20-year, or 20-year down to a 10-year to get more temporary coverage. But the fewer years of coverage, the lower the term length, the lower the premium. And in many cases, that works great. And term life insurance will help young adults all the way up into people in their 60s and 70, perhaps, depending on the insurance company. Maybe an older person that just has some financial obligations out there that if they died, it'd be a crushing burden to either their loved ones or their business or something like that. And, maybe a 10-year policy is just enough of a financial window to be able to protect against that and transfer that risk from you as a person or a business owner over to an insurance company. And that's a pretty good way of doing it. Another strategy for affording final expense life insurance is just pay your premiums strategically. So, depending on the insurance company, most of the insurance companies are going to offer you the ability to pay monthly, quarterly, semi-annually, or annually. So just choose which one ever fits with your budget. Now, I can tell you most people we help, just that monthly payment, that monthly premium payment works really great for them. Just it's predictable, it's always going to be there. If you choose an annual premium, a lot of times people kind of forget about it and then it comes around and they're like, "Oh no, I hadn't planned for this." Now they don't have the money. Now they got two choices: kind of borrow the money or let the policy lapse. And we just find that on a monthly basis, paying it that way, it works great for most folks. Now, if you're a business, and a lot of our business clients, they just pay annually. It's just part of their budgeting process. They know it goes in there, and they just, when they're doing their annual budget, they include, that expense for February or August or, October, whatever it is. And then one thing we always do is we always encourage people to set up automatic payments, because when you send stuff through the mail, the US Postal Service, despite increasing cost of those stamps every single year, it seems like, they lose stuff. And the one thing you don't want to happen is to have your premium check lost in the mail, and then your policy lapses, and you just, maybe life's busy, maybe you miss the notifications from them, and then your policy lapses. Yikes. So don't do that. Now, some insurance companies actually reward you for paying annually. It may be a small discount. In most cases, we don't see it typically being worth the annual discount, because it might only be 10 or $20. And you're giving them that money a year in advance. If you just pay out on a monthly basis, you're actually getting interest on some of that money that you save and stuff like that. So that's kind of the most important strategies for affording final expense life insurance. My name is Randy Vanderveen, and I hope this podcast has been helpful to you. Funeral Funds of America can help you qualify for first day coverage or benefits at funeralfunds.com. That's funeral, FUNDS.com. And our phone number is 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.